Hi, and welcome to our first technical update. My name is Violeta Todorova, and I'm Senior Research Analyst at Leverage Shares. Today we will look at the S&P 500 index. The S&P started the week on a strong foot, extending last week's rebound following 3 straight weeks of losses. The index was oversold and well and truly overdue for a bounce. The daily relative index was oversold, and we see the current bounce as merely unwinding oversold momentum conditions. While the rally could extend further, the first hurdle ahead is the dynamic resistance at 4,200 points exerted by the medium-term downtrend line. The RSI is a widely watched technical indicator that investors use to gauge the health of a trend. The weekly RSI readings remain in a fragile state, feeding worries that the bear market is not over. While the technical picture can improve or worsen as markets gyrate and investors adjust expectations based on factors such as the trajectory of bond yields, which are driven by monetary policy expectations and have closely tracked the performance of stocks this year. Our baseline scenario is for a retest of the June low of 3,639 points. The market is widely expecting that the US have reached peak inflation. With oil prices trading lower since June and a whole host of commodities falling sharply, we could see the current rebound in equities extending a bit further in the short term. With the last comments from the Fed policymakers ahead of the Federal Open Market Committee meeting on September 2021, the CME's Fed Watch tool is projecting a 92% probability that the Fed will raise rates by 75 basis points next week. The upcoming midterm elections, Fed's hawkish forward guidance and shrinking its balance sheet at a faster pace, negative macroeconomic data, money outflows of the stock markets, geopolitical tension and persistent inflation, US dollar strength, US-China relations, downward revisions of earnings expectation and a slowdown in the housing market are additional headwinds lingering around. As the market obtains evidence of further moderation in global economic activities, reservations of a more sustained upside are rising. Overall, the fundamental and technical backdrop point to a likely further weakness over the medium term, and we would exert caution as we enter the seasonally weak period of September and October. Thank you very much for tuning in. See you next time.